Hi, welcome to this edition of A Conversation With. I'm Jim Marshall of the New Bedford Cable Network. Today we're going to talk about the economy and banking. And joining us in the studio today is Carlos DaCunha. He's Senior Vice President and Chief Lending Officer for St. Anne's Credit Union. Thank you for joining us.
Thank you for the invitation, and I look forward to the dialogue.
We've had a lot of off-camera discussion here about things. But tell us, just for background purposes for people who don't know, St. Anne's Credit Union, tell us about just the business in general. There's a lot of branches, obviously, in the southeastern Massachusetts.
Yes, true. St. Anne's Credit Union has been in existence for a little less than 90 years, right around 90 years. Started out with a collection of quarters of some folks over in Fall River that then obtained the charter, and the credit union was launched from there. So we now have branches from Somerset to Swansea, Fall River, and New Bedford, the Greater New Bedford, and Fairhaven. We have about a little over $1 billion in assets, about a little less than 60,000 members as part of our group, and a little less than 200 employees. So, and our radius of operation is essentially the South Coast, albeit we can do business today in Bristol, Plymouth, and Barnstable counties in Massachusetts, and most of Rhode Island, other than the northern part of the state. So we are certainly, and we're one of the top 10 credit unions by assets in Massachusetts as well.
And obviously here you do a lot of business per se in the city of New Bedford, various things.
Absolutely, yes we do. From the 3 lines of business that we concentrate in, which is what I have responsibility for, which is commercial lending, residential lending, and consumer lending. And we do a significant amount of business across all of those 3 lines of business in the Greater New Bedford area.
Talk a little bit, and I've asked all the guests that when they've come on, and I'm sure seeing the changes, how has the pandemic affected banking in general for your operation?
Yes, it's certainly the social dynamics of it have come to the forefront in a manner that none of us ever would have envisioned. Let's say at the end of last year. So being able to operate remotely and have a large number of our employees operating remotely. And by the way, St. Anne's Credit Union, as a side note, the board made a decision back at the end of the first quarter not to lay off any of our employees. So all of our employees have remained fully engaged in serving our members throughout this entire process. And adjusting to working remotely, adjusting to working as many of our employees have had to do without childcare, which sometimes we seem to take for granted until situations like this develop, and that comes to the forefront as well. So between family dynamics, working remotely, having to put in place a whole host of technical aspects that were not there to the same extent prior to this happening. So all of those adjustments we have had to make, which I think over the long run will make the credit union a better, more efficient operation. In addition to that, just on the day-to-day interaction with our members, we obviously, as other financial institutions did, we had to close some, access to the lobbies of our branches. Although the one in New Bedford and Fairhaven have opened up over the last week or so with some restrictions, but they have opened up. But we had to adjust to that as well. Our drive-ups were received extended hours. We did have more people answering the phone as on an after-hour basis and all that, to have that sort of interaction with our members. So we did everything that we could from a strategic standpoint to try to minimize the disruption that all of this could have caused to our membership. But it did have some, changes. So as it related to on the lending aspect of it, particularly on the residential lending, where we are one of the largest lenders in Bristol County and have been for a number of years now, we had to adjust and had to guide our members through that adjustment as well. People that like to have the interaction that you and I are having right now face to face couldn't have it the same way as we would have had, let's say, sometime last year. So
and you and I were talking before the show. I'm partial to going in to the lobbies and knowing the folks that are there after all these years. You get to know the tellers I think, better than you are when you're on the car going through the drive-thru.
Absolutely, and that has been, again, on the social, I call it the social adjustment. On the social adjustments, we have had to make many of those and try to do it in as stress-free environment as we could make it for our members. But the applications process, on the other hand, now, believe it or not, runs much quicker. We can actually get a residential loan, completed from end to end in less than 30 days. Where previously that would not have been the case, but we have built up our technology and infrastructure to be able to do that. So people, our members now can literally give us the documentation that's would normally be required to process a loan application. We input all of that into our service by scanning it and all that. We give you back all of the documents. And so long as you are accepting of a process where there isn't going to be a distribution of paper, you are not going to see another piece of paper again throughout any of the steps of the process until the closing. So all the things that we need to share with you and ask you to confirm or to approve details and that sort of thing, all of that can be done electronically, which, again, although we have been on this path for about a year and a half now.
I was going to say, part of it too is, I know that in our case, you promote a lot of the online banking.
Yes.
Prior to this.
That is correct. So we ended up sort of engaging this to a much higher level, though, as a result of this pandemic, so as to try to continue to move the business along as without interruptions as we could make it for our members. So you could still get throughout this entire process, not only could you contact us and you would have people answering the phone, but if you had challenges of all kinds of different things that happen with whether or not they're deposit accounts or loan accounts, you were able to get a whole lot of that done online and or in conjunction with contacts with the credit union. And this is where the business model has changed a little bit.
Do you see when things, and that's a big question, when things return to normal, do you think that more people will do the online banking, or do you feel that people will still like the face-to-face conversations that they have with their bankers?
Yeah, I think, Jim, as a credit union, I think that we are going to go back to more of the face-to-face interaction, but knowing that there's technology there to be supportive of that dialogue. So they're still going to go back, I believe, because that's the model of the credit union. It tends to be more of the face-to-face interaction. That's at the crux of how we do banking, how we provide and deliver banking. So our members will probably go back to how they were comfortable, which was to come in and talk to me or talk to one of our team members about whatever solutions they're looking to develop. Now, from that point forward, though, we're now going to have the automation to make it faster and hopefully less stressful. As all of these transactions, considering all the regulations and all that, they are increasingly complex, if you will, but the technology will allow us to minimize all of that stress.
And two more things just in the process. One, it's I know security's got to be a huge issue when people are working from home from your standpoint.
Yes. That was one of the biggest adjustments that we have had to work our way through. And we have a fantastic IT team at St. Anne's that worked their way through all of that upgrading, if you will, of infrastructure. We already had a robust security protocol and systems and all that in place. But again, we probably would have had a handful of people like me that had access to the networks and all that from a remote standpoint. And now all of a sudden we went from that to having about half of our employees working remotely and having to adjust to all of the technical aspects to allow that to take place and do it in a safe sort of manner. So, but again, Jim, as I mentioned earlier, that's going to make the credit, now that we've had to do this, although in a much more compact time frame that we haven't imagined, right? So try getting like a couple hundred laptops in a matter of a week, 10 days at the end of March, right, or early April. Right. So, and those are the sort of the dynamics that we had to work our way through. But again, we have a fantastic team on the IT side at the credit union that helped us navigate all of that successfully, actually.
And the only word that I can think of is it's probably made your organization and I would assume other similar organizations more nimble in how you do business.
Yes, I mean, one of the things, I remember back to March or April when we had, as a senior management team, we had daily meetings, and whatever we talked about in the morning, probably we had to figure out to do it differently by the time the afternoon came about. And but that's where, again, at our size, we are large enough to provide the services and the products and all that our members would expect, but we're small enough where our management team, the senior management team, 4 or 5 of us that could get together and make decisions very quickly and work with the board to then implement them on all that. So that's where, again, at the size that we're at, has been actually beneficial to us, because we have the capital and the capacity to be able to buy the technology and all that. But on the other hand, we can react to things a little bit quicker than otherwise would have been the case.
We're talking to Carlos DaCunha. He is the Senior Vice President and Chief Lending Officer for St. Anne's Credit Union. You were giving me some stats off camera, which were pretty interesting, talking about unemployment in general. And before we get into the topics specific, tell us a little bit about those figures as we stand, toward the middle of June here now.
Right.
Unemployment has obviously been impacted.
Yes. So New Bedford, generally speaking, has around 48,000 people that are employed. And out of those, through the end of March, something like 4,000 people were technically unemployed. And so that was a ratio of around 5%, more or less. So then, within 30 days, that number went all the way up to 11,000. So, which is about 25% of the folks that are employed. So that had obviously a dramatic impact. Now, on the flip side, though, between the funds that came from the federal government, together with your normal run rate from the state for unemployment insurance, which is about 50% of your trailing 4-quarter salary. So, and at the federal level, it was for the pandemic allocation was $600. So between both of those, that's the interesting detail. Between both of those, anyone who makes less than about $50,000 a year is actually better off. It receives more money with those from those two sources than otherwise they would have made going to work on a daily basis. So, considering that the household income in the greater New Bedford area is, again, round numbers are around 40,000,
right.
That means that certainly from a falling off the cliff standpoint, the impact of both subsidies certainly, I think, went a long way to helping stabilize household budgets and all of that. Now the dynamic from there, though, is that now folks are receiving still those funds. And some folks, are essential workers, and the largest segment of the New Bedford industry, if you will, is healthcare. So, right. And many of those folks thank goodness, remained employed and fully engaged in all that. And
just on the aside, I want to mention too that the amount of layoffs that you were talking about, the people you were mentioning, it's the hospitality industry that took the biggest hit.
That is correct, Jim. A great observation. Essentially, the top 3 would have been hospitality, which includes from lodging to restaurants and all of that. Construction was another significant significant number, and then retail, so another significant. So I believe that those were the primary 3. Although with the 4th one being education as well, which was sort of interesting, at least from a statistical standpoint. I'm not exactly sure
whereabouts
what that includes. But on the data, if you look at the data, those were sort of the top 4 that had, that went from a single-digit unemployment rate in March to a very large double-digit number then in April, and then on to May. So the impact, I think, at the local level has just been that people haven't been spending as much. I think I was narrating to you that even my own case, our own household, a lot of the discretionary spending that we would have had prior to all of this starting, we certainly have not had. There hasn't been restaurants to be able to go to, although we do continue to support our takeout operations in the area to the extent that we can. And actually, for folks watching, this is the time now to give those very large tips to the folks that are fully engaged. But the impact hasn't been as significant, I don't think, at the household level on the receipts side, but it has certainly been on the spending side. And I think, as I had mentioned to you earlier, an interesting detail at our own credit union was a metric that we look at, of our accounts that go negative,
right.
Okay, the overdrawn accounts and all of that. Interestingly enough, 2/3 of those types of accounts that normally do go negative are not going negative now. So, which again is just another indicator that people are not spending as much money as they would have otherwise.
Well, I was going to ask too, because I saw a national story where I think it was the Bank of America president on one of the programs saying that the interesting thing is that more people are saving now than spending.
Yes.
And I don't know if that's good for the economy in general or not.
Yeah, I mean that's an interesting observation, Jim, because we see that on our balance sheet as well. So, as of the end of last month, we had the largest amount of the core, what we call core deposits, which have been your checking accounts, your transactional accounts, not the CDs and all of that,
right.
because those tend not to turn as often. So, but on our core accounts, the largest amounts that the credit unions have had. Through the end of April and probably through the end of May as well. So, and that's indicative, I think, indicative of two things. Certainly some of it has to do with some of the transactions that we did process, such as the PPPs and all of that, for businesses to remain fully engaged on the economic side. But people are just not spending. That's the bottom line. People are just not spending. Now, even if they're receiving, this is I think the dynamic. People are receiving all of these subsidies and all that I alluded to earlier. But the challenge, though, is that we don't really know when they're going to go back to work.
Right.
The ones that are furloughed, for example, the companies probably have indicated to them that there's probably some level of timeline, right? But that timeline may come together or may not come together as quickly as they would have anticipated. So people, I think, rightly so, are taking the more cautious approach and essentially saying, wait a minute, if I don't go back on the timeline that the company thinks we will, and somehow the subsidies, particularly those at the federal level, somehow dissolve, if you will, and they're no longer available, how am I going to pay my bills? So, and I think that people are anticipating that a little bit and perhaps not spending as much money because they don't know what the future is going to bring.
Are you sensing, I don't know if fear is the right word, but certainly when you talk to your customers,
Yep.
Are they worried? Are they frustrated?
Right. I can tell you that we put together a number of programs to assist people through this period on the lending side, whereby people, if they so desire, they could reach out to us or engage with us on deferring some of the payments on their loans. On the residential side, up to 6 months, and on the commercial side, depending on the situation. So with that, on the residential side, I can tell you that as part of my management team, I heard of stories of folks, who asked for and received that deferral, that they almost cried, after that was done, because that was a relief, like a monkey off the back sort of approach for the period of time. So once that relief sort of goes away, hopefully they can go about their normal as could be, day-to-day procedures and activities. But for sure, the members that we have engaged with in dialogue, Jim, I think has been more of the unknown, right? So they know that they are receiving a certain type of support now, but with politics and all of that, whether or not that's still going to be there, or whether or not.
And you should mention too, as I didn't mean to interrupt, but one of the things you said too is the federal program is 12 weeks.
Correct.
And for people who first started getting the assistance from the federal government,
correct,
your 12 weeks would be up, right at the start of July.
Correct.
So that is, there's an unknown after July 1st. Well, I don't want to say July 1st specifically, right, but July is a huge month for people.
It is, and Jim, that together with the compounding detail that normally summer tends not to be a big driver of certain types of industries. Certainly, the hospitality and all that it is, but even through, as we know, even through the reopening of the Massachusetts economy, it's going to be a gradual sort of process that's going to take time for it to gain full speed. So it's going to be interesting to see whether or not the subsidies that have been in place and have been critical to maintaining things as status quo on economic sense as they can, whether or not that parallels the reopening of the economy. The more it does, the more people are going to, obviously be less nervous about it. But if all of a sudden it's a dead end stop, that the subsidy ends, let's say, at the end of June or whatever it may be, and a lot of these furlough programs haven't really been fully engaged on bringing people back, that's where the anxiety is for certain probably going to increase. And I hope that I'm wrong on that end.
Carlos DaCunha from St. Anne's Credit Union, our guest. Are you still seeing people buy houses?
Yes, interestingly enough, it has subsided for sure. So we don't want to minimize that element of it. But every day we still have opportunities to finance acquisitions. Now, the entire process has certainly changed from the fact that even as I was mentioning to you earlier, even from just an appraiser being able to go into someone's property, right? So and how do we do that, right? So and those are the details.
Inspectors and the whole thing. I mean, there's a lot of
exactly, and we've had instances in which our appraisers are fully engaged on all the safety precautions. We require that as part of our normal protocols. And we've had instances in which the selling family, if you will, either sits in the parking lot in their car and watches the appraiser go in. They try to do it as quickly as they can, capturing the information that's required to complete the appraisal processes and all of that. But even with that, we have had to work our way through all of that, and then we have unfortunately we've had some instances in which some of our applying members have tested positive, and now that's a whole entire new dynamic that as to how we work our way through it. We certainly are not going to bail out on them, and we'll just have to find ways to remain engaged with them as they work themselves through those very, very challenging times. So the dynamics of, in addition to the technology, in addition to being able to do business very differently and all that, it's the social aspects of all of this that have been also very challenging to work our way through.
Have people been making big purchases? I know you do car loans and home equity loans and all that. Are you still seeing that activity?
We are certainly on automobiles. Automobiles has pulled back that business, and we are a pretty good lender in that space as well. And that business has almost come to a standstill.
Really? Okay.
Yeah. So. But other than that, the home equity lines, actually, whether or not it was because of some promotions that the timing of them just came now, but that's actually one of our fastest growing number of applications coming through. And I think that's probably indicative of folks that have the equity. They have the good fortune of having equity in their primary residences, that they want to just make sure that, again, what we talked about earlier, with all these subsidies staying or not staying, or whether or not they're going back to work or not, or whatever the dynamics are, that that they want to be able to have an alternative, if you will, in case that things take a turn to the worse.
You mentioned business, and I know that St. Anne's does a lot of business in the city.
Yep.
Are you still seeing businesses looking, I don't want to say expand, but trying to, I guess, expand in the city during this time?
Not during this time, Jim. What we have had has been people that had plans to come in. In some instances have been put on hold. The transactions will eventually come together, probably at a later date. But the run rate of the business flow, and particularly on additional investments and all that in the city, has certainly subsided. Our commercial lending team, has been fully engaged on, has been on the PPP program, as other financial institutions have been as well, to try to pump as much capital as we can into those businesses so that they can hire folks back as quickly as they can do. But an interesting dynamic has sort of evolved from that to what we talked about earlier on the accumulation of all of the subsidies, actually, particularly for folks that make less than $50,000 a year, they're better off staying on that unemployment aggregation of benefits than returning to work. So that has had its sort of an unintended consequence in that will probably slow the reopening, if you will. But that's sort of the dynamic that business owners will have to work their way through. The other challenge also is that, and I hope that there aren't too many of these, is that the business owners or the smaller micro businesses and all that may not be able to survive, and that would be really sad if that was the case. We have tried to help our own members endure this process, whether or not it's through the PPP program or whether or not it's our own capital supporting their plans and all that. But that's going to be the dynamic, the impact. I think this is going to have a disproportionate adverse impact on the smaller businesses, and that's going to be unfortunate.
Is there any, you've mentioned different metrics,
Yes.
different methods that you look at, numbers.
Yes.
Is there any one or two metric that you look at as a solid indicator of what may happen down the road?
Right.
And I don't know what that would be, but
Right.
are there a couple that you look at? And I know
Right.
that elected officials talk to you and
Yep.
what you see, and they
Right.
obviously value your opinion.
Right.
But what are those things that you look at that give you a good picture of what could happen the next 3 or 6 months?
Right. So unemployment, certainly the unemployment rate, the subsidies or the parallel of the subsidies versus how quickly businesses are opening. To the extent that those correlate, I think that's going to be a benefit to the outcome. In addition to that, obviously then, although it's local businesses, but we're still going to be ultimately impacted by whatever happens at the federal level and at the state level. We were talking about earlier that from a state budget standpoint, they've got some significant challenges. Mm-hmm. We had a chamber virtual town hall meeting on Friday, where our local senators made a reference of the fact that through the end of April, the state tax collection was about $275 million ahead of budget. And then, like 30, 45 days later, it's like $2.2 billion behind budget. So, and again, because some of our industries here, including healthcare being the top industry in the city, rely at different levels on state subsidies and all of that. It's going to be interesting to see what sort of level of impact that's going to have. So I think that between the number of particularly the larger businesses bringing back people from their furlough programs, so that's something that we'll keep an eye on. What's going to happen at the federal, also at the federal level from by way of the subsidies and all that. That's going to be also important to look at. And then a little further down the road would be capital spending. We're also going to be looking at the levels of capital spending that some of our borrowers are looking to take on, which I'm going to just advance that it's unlikely that that's going to rebound probably any time in 2020. So,
we got about 30 seconds left. I just want to give you a chance. Obviously, this situation, the economic situation, not caused like in the early 90s because of the banking situation.
Yes. Are
you optimistic? Do you see a positive sign coming out in the next 3 to 6 months?
Oh, I think so. New Bedford has made such tremendous progress over the last 6-8 years or so from unemployment. Did we ever think that we were going to have New Bedford at like 2-3% unemployment, right? So, and I've lived my entire life here, or most of my life. I should rephrase that, and I had never seen anything to that effect. There have been tremendous amount of investments made in the city to attract business and investment to here. Investment has, in fact, come to the city in all kinds of ways, from the seafood industry to housing development and all of that. So, I'm cautiously optimistic, but I am optimistic that this is still a fantastic place to live, to work, and to play. And I think that New Bedford, from a cost of living standpoint and all that, or the balance between the cost of living and everything that the city has to offer, I think will remain a fantastic place to come to. So, and I think it's all of us continuing to speak of it in those terms, rather than, I always try to view it as the glass half full, not the glass half empty. There's enough people that think the glass is always empty, which is really not the case here in New Bedford. So.
Thank you for joining us. A lot of good information.
Thank you for the invitation. Appreciate it.
That's going to do it for this edition of A Conversation With. I'm Jim Marshall. Thanks for joining us, and we'll talk to you again soon.